Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. Today is, where are we here? It is the RationalInvestor.com's Daily. That's always good to see. Actually, YouTube's cooperating with me a little bit more here lately, so that's good. So here we are. It is the 11th of June. Thursday. Thursdays is a cool day at TRI because it's baby powder report day. Woohoo! Party! Actually, he even stuck around and is in the call here. You want to just say hi to everybody over there on the public YouTube, Julian? Just say hi. Little hi? No, we're not going to get it. Oh, well. He is in the call with us. He might say hi to you guys later on. Maybe he's just stepped away. We had a great report with Julian today. Very robust, all over the place, talking lots of setups. Of course, and I kind of conjectured in the public forum that I wouldn't have been surprised if Julian was hunting longs off the bottom in the metals, and sure enough, he was. So, and interestingly enough, he explained today how he was actually very bearish of the euro, and he decided to actually go long gold in euros because he was thinking euro would go down, and he's looking for gold to go up, and he's getting a double whammy. And as well, the shark is shorted the stock market against those recent highs just yesterday after the Fed. Julian's on fire right now. So congratulations, Julian. Great content for site members today. We had a lively conversation. I think it went on about an hour and a half. And I think the site members were very well served. If anything, on the heels of people insulting, 50-year fund manager veterans openly and publicly, it doesn't surprise me the market's quickly embarrassing those people. And if anything, that was a wonderful tell yesterday that this is just getting a little bit stupid. I'd also say too, it's interesting. We have a new, the site itself constantly evolves, and interesting how content changes over time as new site members continually join our team. And we have one gentleman who joined our team recently who's super jazzed about astrology, and he was very interested in a certain pattern that happened with Venus and Earth and the Moon and Mars and all that. Unfortunately, just because you see these aspects, that doesn't necessarily mean something's going to happen on a dime. And it was really interesting to connect that astrological event and the FOMC event that basically the market was moving into yesterday. Once that event was done, then all of that astrological stuff, the release of energy and stuff had to be expressed, and here we are on the other side. The Fed itself was the catalyst in the market's eyes. So having said that, I always I'll have to say I'm very proud of Sjord's hard work and what we're putting together here on the site. I had cautioned everybody even publicly yesterday on things like Twitter that when you see the breadth of both short and long heavily in one direction, the same direction, that's a very, very dangerous sign. As well, too, our breadth reading itself was officially overbought, and actually, interesting enough, this data is from yesterday's close, so we actually got a sell signal from our breadth indicator on yesterday's close. That was even before today's nasty price action. So really cool to see. And again, wonderful content for this site. I think people are getting really good value out of this. Also, too, I thought this was super cool. The screeners are starting to kick in. I'm a huge fan of bearish engulfing patterns. Actually, I think I had to alter this. Oh, no, there we are. This bearish engulfing pattern candlestick screen, it's so simple. So it spat up TSCO yesterday, and I look at the chart and I just start to drool. I'm just like, oh my goodness. So not only are we getting excellent sort of broader market reading, but we're getting some pretty kick-ass trade signals coming up out of the screener already. I'd be more than happy to be short a name like this with a chart that looks like that. It's just, que bella! So, TRI is totally firing on all cylinders. I was kind of hoping that this would happen, where, in essence, we get to this next cycle, and TRI is basically hitting the ground running, and we're just firing on all cylinders. So I'm super stoked. As for your content here, I generally, for the public, like to keep the conversation relatively limited and focused here. I'm not quite sure why I have this little penny stock on here. Oh, what the hell have I done? Oh, Brian, you're insane. How the hell did this damn thing get on here? Let's see what we got here. US dollar index. Here we are. There we go. So, I had talked to you guys recently about pretty significant bearish objectives coming in on the US dollar right into that FOMC event. And I honestly feel like this was just the biggest trap that was ever laid. And you can see US dollar index rallying smartly. Like I said, Julian's in there like a hawk hunting euro shorts. Keep in mind, a huge portion of this index is nothing more than the euro. So what a surprise to see the US dollar index rallying smartly on the other side of that FOMC event. Very cliche. And of course, also too, this is exactly the moment that barstool fund managers are all of a sudden insulting guys like Warren Buffett, and they don't even realize that they're walking into a trap here. So sad. Risk on, risk off. I think we've talked lots and lots about this recently. There's no reason whatsoever not to expect a pullback here. Whether it be reload short zones, whether it be liquidity pools. I think, what was really interesting was somebody had pointed out on the site today that actually there's a little bit of a gap here, and it was this initial gap that really stopped the bull run right there. So interestingly enough, you can kind of think about it, right? Market dumps really hard. And everybody's like, oh shit, oh, buy the dip, right? We're right against these lows, buy the dip. So market finishes right there, beep, opens up, and they're all like, buy the dip, buy the dip, buy the dip. And then all of a sudden, oh no, Jesus Christ, we're screwed. And the market collapses. So you can think of this wick as, wow, there is a bunch of trap bulls that bought the dip, and they would love to get the hell out of there. And sure enough, if we look at price action, that's pretty much exactly what happened here. So you can see, there is the gap, there is the gap fill, and into that little wick, they got a little bit released, but the supply would just overwhelm demand. And of course, Mr. Fed speaks, and the impression that I got out of Mr. Powell's speech was, this situation is pretty bad, folks. He publicly says, we're not going to even think about raising interest rates until 2022. Excuse me, what year is it? You're saying you're not even thinking about raising rates for the next year and a half? That's not exactly an inflationary statement. He said, we as bankers, we can lend you all the money you want. Yeah, well, we got the spigots wide open. He even publicly said, but there is nothing we can do about demand. And if demand just doesn't come back, well, sorry, there's not much we can do. That's not a good sign. And then also, too, throw that in with people publicly ridiculing Warren Buffett. Oh, Jesus. That's just a potion for disaster. Warren Buffett himself might come out and just short the fuck out of whatever stock that guy bought just to drive that guy into the ground. I mean, Warren's got a fucking ego and he's got a huge war chest. You never know in this crazy world. Anyway, point of the matter here, shouldn't surprise us whatsoever to see a day like this. And now, the irony of all of this, you could actually make the argument, do this a few more days, right? Really freak the public out. And all they're doing is they're just bringing it back down into support. So, it is what it is. Also, too, I've talked to you guys lots in the public about, I do believe there is some sort of celestial sort of event window here. The end of June, beginning of July. It's interesting to watch, man. They can take these markets down in a heartbeat if they want to. So is there really any need for me to step up and really take a hell of a lot of risk in the marketplace right now? Nope, none whatsoever. And of course, in the junior market, we'll get to that. If you do have poppers, and pay yourself. Do I need to go and risk a bunch of new money in the market right now? No. And by all means, if there's any names that I picked up recently that are starting to show any signs of failure, I can just walk away just instantly and take like a 10% loss, big deal. But now we're back into that kind of market state where it's not as easy as Mr. Barstool. Now, with regard to actually shorting this, I've talked to you guys length. We have location. That's good. What we really wanted to see was things like indicator confirmation to show divergences. And I think actually the divergences are starting to confirm with this break. So ironically now, a guy like me, what I want to see is I want to see a pullback, then a nice M, and then I'm going to be thinking shorts. But probably happens a lot faster than that. And I don't even know what kind of counter trend rally this is. It might just be really muted. But that's sort of what I would be thinking now is, okay, I've got location, got divergence, now I got to find some structure. All right, so that's sort of risk on, and clearly risk on is getting its ass kicked here. And if we also look at the oil market, same sort of thing. We never knew exactly where the top was going to come in, but we do now have a pretty well-defined double top. I wouldn't be surprised to see oil back in the 20s. And really a lot of this was just straight line up. We could very easily just go straight line down. And of course, there's our July 1st pivot. I thought this was fascinating. Horizontal support and resistance, gaps, and 78.6 reload zone. To me, this is the location to be thinking about being buyer crude. Not up here. Anyway, we'll see how that goes. Risk off proxies, I think are actually catching a bid here, and that makes sense. US dollar, technically, I think it is a risk off proxy right now, so they basically got the euro in a topping zone. Let's see how hard, and all the commodity currencies, Canadian dollar, Australian dollar, Kiwi, I think they've all rallied way too hard. Mexican peso. Everything, I think they've rallied way too hard. Now it's probably the question of, do they all have to come back down to earth? So it shouldn't surprise us to see the bonds working their way right back up into this original range. And again, I don't really want to judge whether this trade has actually worked or not until we either have either one of these wild objectives hit when we first talked about that strangle trade. So I'm just going to say the jury's out right now with the bond market. Risk off is clearly catching a bid, and it's carrying the day. In the gold and the silver, same sort of conversation. We rallied right up against now the bot entry level. So to me, this looks like very much this is our trading range. Hey, you can see the size of this gap. I mean, yeah, how often do gaps like to get filled? You see how this gapped higher, and then we had to come back down. So there is that big honking gap. Somebody even recently said, well, considering you're such a bot guy, why aren't you taking this bot? And I guess the problem that I have is I don't really like taking bots at the end of these big moves. Hunting along here, heading into this resistance zone. Really, and of course all the gold bugs hate me when I say this. Really, if I'm up in this area here, I actually have to be thinking shorts. So I know it's very, very unpopular. So that's probably the primary reason why I don't really like the gold and the metals markets here is this, to me, looks very, very risky. Having said that, like I said, if you're a lower time frame trader and you got balls of steel, fucking A. I really didn't have a problem. Those, sharky monster traders coming in and risking against these lows, it's just not my style. But the great part about TRI is we're a team here. We have many different styles, and one of our team members, he loves trading like this. And of course, he's long and enjoying himself rather nicely right now. So congratulations, Julian. Nice trading, my friend. Interestingly enough, I think the really good gold trade is actually being long gold in euros. And that's the trade that's really kicking ass for Julian today. Heading over to the stock market in particular, kind of reiteration of what we're seeing in the risk on, and we had sort of talked about this recently with you guys in the public. If anything, I think this was probably a nice little sort of a warning sign ahead of time that there could be trouble developing for the junior market. A lot of junior stocks are just getting their asses handed to them today. A lot of pullbacks, like that Funko. I bought it at like 3 and change. Had my order to sell at 7 and change, and now it's sitting at like 5 and change. I mean, I'm still up nicely. I didn't get my sell off on a double. Shit happens. I'm not really in a big hurry to do anything there, but do I expect to get that filled this time? Over the next week or two? No. But names, like I said, that if we were just like coming along the bottoms and we were sneaking in and they start failing, I'll just kiss them goodbye. But, the interesting thing at TRI is you just never know what the hell's going to happen in the market. And here's a great example of one that Kevin was touting, and you can see the double bottom. A bunch of TRIers got into this. I don't know why Kevin and I didn't get in, but nonetheless, look at what it's doing today. So there were some TRIers that are like, look at me, I'm an awesome trader making more money. Bottom line here, you never know how the hell this is going to happen. There's always a bull somewhere. And if anything, this is just like crypto. If you're going to follow the broader market and the indexes, probably odds are we're going to be heading lower. If, however, you have a fundamental driver, you have a story, you have some reason why your stock can go, or your cryptocurrency for that matter, like ZIL, for example, right now is going absolute 8 shit in crypto. This can happen. So just put yourself in a position so that if this kind of does happen, sell half on a double, you just keep spoon feeding it out. So congratulations, TRIers who are long CLDX. This thing just keeps rocking and rolling. Way to go. Heading on over to the corn and crypto in particular. We had been sort of talking recently about how everything was just sort of like on pause. And interestingly enough, I actually think it's still on pause, believe it or not. If I look at my crazy bow tie theory, I do have AB equals CDs now. That, remember we had sort of said if we lose this level here, we might dump down into against this trend line. But it's interesting how the dump came, they ripped it, confirmed the AB equals CD, lower highs and lower lows defines a bear. AB equals CD targets now are down in this area. But interesting how you can even see now, they've rallied it off of the lows right back to our crazy bow tie. And remember our funny little sort of market symmetry kind of study, and I was kind of thinking it was going to be operating something along those lines. I mean, obviously, market never repeats itself exactly, but nonetheless, you can sort of see that sort of symmetrical, symmetrical, well, no, that's not the right word, that pattern following behavior, I don't know what the right word is. And ironically enough, I still think we're stuck in this crazy ass bow tie. And, also too, this is a beautiful analogy of our funny little conversation about Mr. Hayes and crypto stop runs. Maybe I got rid of that chart. I was showing you guys Mr. I guess off of like 30 minute, there's an hourly chart on MEX. I mean, just stop run central, and oh my goodness, they're just screwing with the kids' heads here right now. And I even think, if I'm not mistaken, I think I heard Kavarkanator got flushed on one of these moves on a trade that he had. So even the pros are getting flushed out by this stuff. And I even put a tweet out yesterday saying, I don't know who's doing this. And I actually kind of think it's actually even beyond Mr. Hayes. It's so violent, and they just keep doing it over and over, that I think this is actually extremely coordinated effort, what they're doing here. And this just feels to me like we're getting ready to move the corn like a good maybe $2,000, $3,000, $4,000 here. So we got to get rid of all the little punk ass bitches that are like going 100x leverage or even 10x or 20x leverage, because we don't want them to make money in this move. So how do they do that? They just wash the market back and forth and just keep doing it until the little guy goes, oh, fuck, I can't handle this stress. I haven't slept in 4 or 5 days. I haven't eaten. My girlfriend won't talk to me. Fine, put it away. I've had enough. Forget it. And then literally the moment that happens, boom, the market's moved. So that's what I still think's going on here, everybody. It sucks. I will say, though, that what I'm kind of seeing, we've had a lot of sort of sideways, humming and hawing, and then we're actually starting to see some chinks in the armor. So things like this NEO, we had talked about move stop to trailing levels hit, and that clearly got flushed here today. So this trade's gone. It's done. It's over. I had talked to you yesterday in the public about watching names like this OMG. Is it going to start to slip here? So that's happened. We talked about the diamonds within diamonds, and if you're kind of like chicken shit on Ethereum, maybe you just better get the fuck out of here when this firms. Remember we talked yesterday about Bcash and how it was looking a little dangerous. But notice too, every single one of these has this big honking red candle. To me, that screams program trading. Some, Fidelity or Templeton or one of these big outfits simply just said, sell the whole damn market right across the board. And they did it in like an algorithmic approach. And also, this all happened basically the exact same moment that the stock market fell out of bed as well. So I do think that there's a chunk of program trading going on here. Please keep that in mind as well. No doubt about it. Whether it be crypto, whether it be stock market, the whole damn risk market is lifted here. So, is this pretty risky environment? Absolutely. And just be forewarned, I thought it was interesting. We're constantly looking for ideas that haven't, gone straight up and are emming out. I put out a bunch of tweets, stuff's looking pretty damn risky up here. Things like Link, people fell in love with that. Could it come back down a bit? Sure. Ethereum, same thing. All of these. OMG, perfectly fine. So, if you're thinking about new ideas, where the hell do you think? And love having Kevin in my back pocket. So here's one that's just sort of bumping along the bottom end of his range. And he's kind of like, well, Brian, you might want to mention this name. It's not really like pound the table, but if you are shopping, this is the kind of idea that I like thinking about shopping against. Can you see signs of divergence? If Kevin told me this, probably odds are there's a big fat MACD bullish divergence down here. Can you see signs of W's? Well, geez, I see higher lows. I see higher highs. Did that take? Yeah, higher highs. And here's another W coming in here. So, it's a name to chew on. And I'm certainly not pounding the table. And you all know, I don't tell any of you what to buy. I'll just tell you what interests me. So, I got to tell you, that looks interesting. Something for you to chew on. All right, everybody. Hope you got some value out of that. Go to tread carefully here, everybody. I think we're back into sort of the shoe could drop at any moment. And the sort of no-brainer easy money there that we had over the past month or two, I think that window is closing. So, okay, everybody, have yourselves a great day. All the best, and